Joining us now is Shweta Rajani, Head of Mutual Funds at Anand Rathi Wealth. Shweta, really good to have you with us. Do you buy into this optimism about the Indian markets?
Hello, good morning. Absolutely, if you see, this is clear-cut, a very good time to be in the Indian market. And the optimism that you're seeing right now is clearly because India is likely to be fairly resilient from this entire, tariff war situation and the global uncertainty which is there. The Indian outlook itself, the fundamentals are going pretty strong at this point of time. And that's what we've seen in the earnings season as well. That so far, it's almost 30% of the index which is declared results. But within that, banking and financial services have been most of the companies that have declared results there. And it's all been double-digit growth. So I think that's bringing back. We're also seeing, if I have to say just a green shoot, but the last 2-3 days, FI has been net buyers in Indian equities. So yeah, fundamentals being strong, sentiments turning positive, earnings coming in, very much positive is all leading to this optimism that you're seeing. And in my view, this is likely to continue over the medium term.
President Trump, though, has also threatened potential tariffs on the pharmaceutical sector. Of course, we know that drug makers are big across the Indian market. Is this a concern in perhaps some sectors of the Indian market that could get hit?
Absolutely. There would be certain sectors where, there could be a tariff hit and therefore there could be, certain issues coming in there, earnings, taking a drag in those sectors, be it, pharma is, you said one, IT not directly hit, but then because of, lower cost, it could have an ancillary downside impact to it. Auto ancillaries could be another one. So yes, there would be a few sectors which would be negatively impacted. But a lot of your domestic-oriented sectors, could also benefit because we're expecting consumption to go up. Banking and financial services would be another one to be fairly resilient. Private capex is supposed to, there is an expectation that we could see some pick up in that space. So sectors related to that, call it, building materials, cement, all of that could be on the positive side. So if you see, there would be a mixed bag. But when I'm looking at Nifty, the weightage of the domestic-oriented sectors would be far more. And therefore, from an overall market perspective, we could see, markets to be on the positive side and earnings growth of, maybe a 10-12% over the financial year 26 looks like a possibility.